This is Bloomberg Crypto, a daily Bloomberg iHeart podcast. And I'm Stacey Marie Ishmael, managing editor of crypto for Bloomberg News. It's Friday, October 21st. This is episode 100 of the Bloomberg Crypto podcast. When we launched, in June, Bitcoin was trading around $30,000. Celsius and 3 Arrows Capital hadn't yet filed for bankruptcy. People knew where Do Kwon was. Celebrities cared about NFTs. It was a different time. When we launched, we knew what we wanted to do. Every day, we take a look at all things digital assets. The merge? Absolutely. Algorithmic stablecoins? Of course. Bitcoin mining? No doubt. And we talk to reporters, editors, analysts, investors, industry experts, academics, policymakers, all in service of helping you better understand how crypto is shaping and being shaped by finance and culture. So for this 100th episode, we're flipping the focus just a little. We're going to spend some time answering your questions and hearing from Bloomberg senior executive editor Chris Nagi, aka my boss.
The creation of the ledger, of the blockchain ledger, seems like probably a kind of immutable part of the evolution of people kind.
Chris, welcome to the podcast. Chris, you are here not just because you are my boss. But that helps, though. But also because part of your responsibility here at Bloomberg is understanding better than any of us, really, like why markets are doing whatever it is that they're doing. What has it been like for you having to do that for crypto for the past year or so?
Pretty crazy, I would say, to begin with. I mean, it's not like the rest of the world's markets have been behaving particularly sanely. Let's just establish that at the outset. This has been as loony 2.5 years as I've ever seen. But I would say crypto has just been sort of a proxy for the emotions that are driving everything else. It's been somewhat of a lesson in wishful thinking, which markets frequently are, needless to say. But I think the big sort of kind of logic artifact of the last 8 months or whatever it's been has been the upending of the big theory around crypto, which is that it was would work as an inflation hedge. I don't think anyone really knew whether that was going to pan out coming in, and watching it turn out not to be true, and for crypto to be like pretty much everything else, a call option on the world's liquidity, has been pretty instructive. I think we can pretty safely say at this point it's not working out as an inflation hedge, and its correlation to everything else wishful has been its big feature.
And from the perspective of people who don't want it to be correlated, more bug than feature, really, right? It's like, in the absence of having something like Bitcoin as an inflation hedge, in the absence of having wacky tokens in your portfolio that you should be getting like some alpha out of because they don't move like anything else, what makes these markets interesting then?
The raw psychology of it all, I think, is its main attraction. It remains hard for me to see exactly what the value proposition is here. I think that separate from the question of whether or not it's a workable sort of means of exchange, which I think is a much more interesting topic for crypto in general, its speculative meaning it's always been purely just that. It's been how many people can we get enthusiastic about it? Just like many other things in putatively real markets right now, like technology, certainly meme stocks, but really the rest of the market. There's another aspect of it that I find pretty interesting. You know, people who've ridden Bitcoin both up and down, and the way that it works as sort of, again, in wishful thinking aspect, the people who wrote it up are largely the same people who wrote it down. Says so much about what investing is. The ability to hang with something that rose as much as Bitcoin in the sort of its salad days, 2020, 2021, I am convinced, and this is like maybe my first rule of investing, it's the exact same thing that causes you to hold it all the way back to where it is now. I have relatives who have done this, who, if you said a single discouraging thing to them about Bitcoin at any Thanksgiving, is where these things typically happen, you would be basically, depending on the specific relative, punched out of the room. And this lesson, this fact that the same talents that make you a star investor on the way up are the ones that kill you on the way down, I just think is arguably the most interesting sort of immutable fact of markets.
You said a couple of things there that kind of anticipated some questions that we got. One of them very directly, right? So Philip wrote in, do crypto markets reflect the same kind of trading psychology as other markets? What I'm hearing from you is like there's definitely a psychology, but it's not the one you might necessarily expect. I was talking to one of the producers on the show, Sharon, earlier about the fact that, people buy high and sell low in crypto, which is very confusing, but it's that same energy that you're describing.
Yeah, no question. Again, it's just, as millions of people have said, it's just the sort of reinvention of facts of investing and finance that have been with us forever. Something's hype catches on, and that's what draws people to it. Again, it's particularly pronounced in Bitcoin or crypto in general, because I fail to sort of understand what exactly the argument is that should give it sort of speculative value. I'm aware of some of the argument, some of the qualities that made gold into a lasting store of value. The fact that it doesn't rust was a big one of them. Was by far the closest I ever came to understanding why this stuff should work as a long-term store of value. It's immutability, it's finiteness. That is something that kind of gives it a kind of intrinsic difference from everything else. But still, there's a lot of scarce things in the world, and it's been difficult for me to quite differentiate Bitcoin from a lot of those that don't have any value, don't fluctuate, go up and down like crazy. So again, it's just been a pure hype machine. It's, what else can we say? It gives me no great pleasure to make that case, but that's what happened over the last 3 years with meme stocks, with all these things that I feel like people largely knew better about and decided to take a punt on anyway. And I guess this is what happens.
Well, Charlie, who asked the question, why does a crypto like Bitcoin have any value? The answer is maybe. I think it has value, that, not to get too sort of either heady or existential, but some days I feel like it has value because people decide it has value. There's a lot about crypto that to me has always behaved less like a predictable financial asset and more like, as you said earlier, a barometer of sentiment than anything else.
That's true. I mean, a lot of the stuff that gets arrayed around it as sort of initial conception, digital unit of exchange, a thing for remittances, just blockchain sort of database, ledger technology in general, I think is really subverted by the obsession with its up and downs, causes a lot of waste to occur around the asset. It's very difficult to obviously make any of these means of exchange systems work with the thing fluctuating like crazy. Another thing is that a ton of bad money is thrown at bad ideas as a result of it. I think this is a big problem. Like right now, your average sort of crypto startup is some number go up, number go down thing in essence. And it's diverting money from things that actually could work, one thinks. I mean, maybe that's how things like this always work. I mean, undoubtedly it is to some degree, that you're going to have a long period of wasteful spending. That absolutely happened during the internet bubble. And then good things when people, not coincidentally, when the price finally collapsed and the obsession went away, that's when sort of the serious commerce started to be built.
Right. You are perhaps inadvertently echoing the idea of many venture capitalists right now that this is the time to build. Right, the notion that the speculative excesses are being run out of the market, the irresponsible players are having to be more responsible, Ergo, we should see some actual use cases arriving sometime imminently.
Yeah, 100%. And the cycle is not in any way different from the late 90s. I feel like another big distraction was just the number of charlatans involved in it, a lot of clear grifters that were sort of the face of Bitcoin for a long time. It's good that they get moved out. I mean, they're never going away completely, but that doesn't help the case, and it makes it very easy to throw mud at it. And believe me, I love the throwing of mud at it. I think, but all of these distractions were not a great thing for the overall prop. It just made it so assailable.
Coming up, you'll hear more from Bloomberg Senior Executive Editor Chris Nagi, and we'll be answering direct questions from our listeners. We'll be right back. It's sort of weird when institutional investors or representatives of institutional investors are like, I would like more volatility, please, because my job is not fun enough. But I'm getting the vibe, and having been covering this and some of the things that we've talked about is that a lot of people are in this because they felt like it would be fun. And the existence of the charlatans, the grifters, the bad money being thrown after bad ideas was like some sort of acceptable externality as long as there was a good time to be had. But now there are no parties and everyone is sad. But the grifters are still there.
I am sure that the untold stories of sort of speculative fortunes that were made off this thing through that, I mean, FTX is reasonably forthright about some of their capers in the space. You can only imagine, given hedge fund wherewithal and the intelligence being poured into the trading side of it, the stories that exist, the uncovered stories that exist around just gigantic fortunes being made. The fact that may have been coming to an end, and people are lamenting that, well, welcome again to speculation. You had a window to get that done. I suspect a lot of really smart people did get that done, are sitting on islands somewhere. And again, these things have life cycles. So
if you are one of the persons sitting on a yacht or on an island who made a bunch of money doing shenanigans and would like to tell us about it, all of the reporters at Bloomberg have Signal. Feel free to let us know. We're happy to chat at any time. One of the big picture questions that we got, and I feel like you are uncommonly qualified to think about this given the remit of your universe, is from Johannes. Where do you think crypto will be 100 years from now? I struggle with the baseline question of what do you think is going to happen tomorrow? So 100 years from now feels hilariously far away. But are there any kind of big trends that you're seeing that you think either crypto is going to benefit from, or is it just going to be nuclear war and none of this is going to matter anyway?
Well, that'll probably be true. But leaving that out, I do feel like the whole concept of trustlessness is kind of an inescapable evolution of basically everything. I think just sort of the distributedness of online life and the way that trend is going, the way, everything is becoming basically unverifiable that you look at in the world. Deep fakes, Twitter, everything that goes on is totally depersonalized increasingly and impossible to trust. I think that aspect of it is probably right at some level. The creation of the ledger, of the blockchain ledger, seems like probably a kind of immutable part of the evolution of people kind, basically. So in a very broad sense, I suspect that the discoveries in the area of sort of trustlessness is what its big discovery is going to end up being. And if everything gets tokenized and I have an app where every single possible financial gesture I could possibly make is handled through the same channel, someday, I wonder if that'll be me. But I do feel like the arrow of financial evolution sort of heads in that direction at some level.
Well, TIL, you are a gigantic Hobbesian. So that's...
No doubt.
Amazing. Well, thank you so much, Chris. A pleasure to have you on the podcast.
Same. Thank you.
Thanks again to everyone who submitted questions, and thank you, Chris Nagi. You can find Chris on Twitter at ChrisNagi1. That's CHRISNAGI1. On the next episode of Bloomberg Crypto, September might have a reputation for being cruel to the Bitcoin faithful, but are they also in for a scare in October? This is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Send us your comments, questions, or suggestions for the show to crypto@bloomberg.net, or find us on Twitter, we're @crypto. The supervising producer of Bloomberg Crypto is Vicky Vergolina. Our senior producer is Janet Babin. Our producers are Mohammed Farouk and Sharon Barrero. Our associate producers are Ty Butler and Moses Undum. Desta Wonderad is our engineer. Original music by Leo Sidran. I'm Stacey Marie Ishmael. We'll be back tomorrow.